I'm Charles Payne. This is Making Money. So let me start with my take because everyone's got an opinion. I want to share mine. First of all, how did we get here? Let's walk through this day's session. It didn't start here. It began overnight in Korea. Their market down. Now the Kospi down. At one point, it was down 13%. That would have been the record. The record is down 12%. That was just earlier this year with the onset of the Iran conflict. Big dates here. You know them all. The tech bubble crash, the global financial crisis, 9/11. So obviously it was a big, big day, right? Right now it closed down 9.99%. And that set the stage, right? And here's the thing. A lot of regret out there. Most of this is emotional, folks. Yesterday, you had the guy in charge of the Korean market saying he regretted putting out these single stock levered ETFs, right? I mean, we're talking about stock market fever. It's gripped this island. You got 52 million people, 100 million accounts are opened up. People are selling life insurance policies. Everybody wants into this market. And so, again, when you see old folks selling their life insurance policies, it gets a little nervous. So he's a little regretful right now. And this is what he's talking about. These levered ETFs in Korea, the dark blue, that's your retail investors. They own 92% of these 12 ETFs. It's gone parabolic, to say the least. But I think there's something interesting you should also know. Because you hear a lot of guests come on and they say they're worried about our market because of high margins, right? Margins are high. Margins are high, too. Margin account loan balances rocketed in Korea. But here's the other thing that I think is even more compelling you need to understand. Marginal loans as a percentage of their market has dropped precipitously. This is not a red flag, folks. I mean, the market came down a lot, but right now, this is pretty normal stuff, right? So maybe there won't be as many or as much reversals as many folks think. But it's not just Korea. Asia's killing it. When I wake up in the morning, the first thing I do is look at news from Asia. I never even look at Europe anymore. I thought this is a great headline. FOMO really got to me, right? So 26-year-old kid with no job, I don't know how he got it, but he had 60 grand he put into the market over there. Get a little antsy, right? That's what happens. A lot of folks come to the market late, they put everything into it, and the smallest moves, well, can make them nervous. So what triggered this move? Well, let's talk about it. Some article, local articles, right, in Korea that kind of triggered this thing. And it essentially was saying that Hynix was going to slow down on their high bandwidth memory chips, the HBMs, and focus on DRAM chips. And I'm saying to myself, that's kind of weird, right? I mean, why would they do that? Right? Anyway, because remember, the DRAM chips have lower profit margins. Essentially, what this article is suggesting is that the orders aren't coming in. But think about this. You have these kind of articles all the time. Samsung and Hynix are scaling back DRAMs. You had that back in March. But then look at this one. Hynix is doubling its chip capacity, and this was just earlier this month. So these kind of articles, this kind of scuttlebutt comes around all the time. But again, when there's anxiety out there, you can trigger this kind of selling, and that's what we saw over in Korea. Let's get back to fundamentals. This is what ultimately matters, right? So Samsung and Hynix, this is what we're looking at for the next few years there. It's just phenomenal stuff, right? Money is being made. It's real money. It's real orders. It's billions and billions of dollars. And these are going to be the two most profitable companies in the world for the next couple of years. So, I wouldn't be so anxious about it. In fact, here's an interesting tidbit. Hynix has already figured out bonuses for next year. So this year, the average employee there is going to get $477,000. That's up from like 100 grand a year ago. Look at next year, $900,000 per employee. This is not based on the stock price, folks. It's based on business. It's based on money in the bank and what they're going to make. Remember that. This is already in the cooker, right? So it brings us back again to earnings. Earnings, obviously, we know, the mother's milk of rallies. So this is this year, 2026, already off the chart, through the roof. Look at next year, 2027, even more pronounced. These are global companies, right? So, yeah, it's true. Even the greatest companies in the world can have overbought stocks. But it's a world of difference from being overbought to being overvalued. Again, watch earnings and watch margin expansion. Those are the two things you really want to watch. As far as the United States is concerned, well, listen, it goes without saying, AI has been phenomenal. In the S&P 500, we put in more than $30 trillion in value since 2022. Since ChatGPT came out, $30 trillion has been made. It's remarkable. It's remarkable. So, yeah, that underscores the importance of all of this. And year to date, coming into the day, these are your biggest winners. Technology. Okay, technology all the way down. You have a few industrial, but even those are really de facto AI technology database build-outs, right? So I understand when someone says it feels like this is the dot-com era, but it's not the dot-com era. Another thing to be careful of, that last year the dot-com was mind-boggling crazy. I mean, you think you've seen crazy, we're not even close to it, but only two sectors worked back then, tech and telco, right? Even with today's angst, think about this for a moment. At this very moment, 60% of the S&P is higher. 60% is higher. This is your S&P 500 sector. So yeah, you've got technology that's getting hammered, but think about this. Consumer staples higher, real estate higher, utilities, healthcare, energy, financials, and even, and this is your biggest tell for me, as tech sellers leave SIBIs, they're buying software. So every time the financial media and the bears think that they've got the tech trade skating on thin ice, these names were back and they knocked the stuffing out of the experts.